Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Thursday, the 9th of May, Bull versus Bear webinar. Steve Miley here on the Call for Trading. Happy birthday to my eldest son, Sean, by the way. Happy birthday, Sean. So I'm going to go for our usual regular run through in it today. It's going to be brief, guys. Not much happening, not much to say. Don't try and make it up and say stuff that's not there to say. So it's going to be brief. But I'll do the regular run through in here today. We'll take a look at the fundamentals, the macros, the central bank activity, the calendar, the geopolitical, and then we'll take a look at some charts as well. Okay. Just a note of housekeeping as well. Note of housekeeping. Tomorrow there will be no webinar. Friday, 10th of May, no webinar. I'm otherwise detained, so not able to do the webinar tomorrow, Friday, 10th of May. Webinar will return as usual on 13th of May, Monday the 13th of May. Okay, so let's get into it. So it's been fairly quiet on the European data fund. We did have a significant event. The Bank of England have been flagging this all week. So we did get a slight dovish shift from the Bank of England here. So previously, as you can see in here, we had the forecast was for a vote for unchanged. We had previously 9, and then the forecast was for 9, but we had 7. We had 2 actually voting for a rate cut. Okay, so the tone was slightly more dovish than expected. That's meant that the pound has gone lower. The FTSE as the UK index is slightly outperformed. So another central bank kind of edging towards a more dovish tone. Remember, back in March, we had the Swiss National Bank SNB cut unexpectedly. This week already, was this week or last week? No, this week already we've had the Riksbank, which is the Swedish National Bank, cut rates unexpectedly. Somewhat unexpectedly, and the Bank of England a more dovish tone than the market was expecting in here. So central banks shifting towards that more dovish place. Remember, obviously, the Fed have shifted throughout. The Fed and the market, view of the Fed, has shifted from far more dovish to far more hawkish, but of late just slightly pivoting back to slightly more dovish. Remember, the ECB and the anticipation is that we get the first rate cut from the ECB in June. So potentially this is signaling, other central banks moving towards a more dovish tone. So we could see that. It's not going to influence the Fed, but these are reacting to the data they see in their economies. But remember, it's a global economy; it's very interlinked. So we could see a shift also coming at some point from the Fed. So just a global shift towards slightly more dovish. Just look, and then going into today now, we've got some UK speakers. So the Bank of England governor, MPC member Pill, are speaking. So there's more coming out of the Bank of England today. We also get Bank of Canada governor McClem is speaking later today. And Daly also speaks from the FOMC. Yesterday, the market was up again. Dow was up, and S&P was little changed. The Nasdaq slightly up. The Dow up for its 6th straight session. Let's look at 5 things to start your day. So stock futures are pointing towards a lower open, but not massively. A lower open here. Earnings season coming to an end. We've spoken about that. We're not going to be looking at earnings. We'll have a quick reminder when we're getting the video coming in a couple of weeks' time. Spain's second largest bank, BBVA, has made a 12 billion hostile bid. But nothing really going to impact us. Elon Musk artificial intelligence startup X.AI Core is set to close its funding round evaluation. Apple, the question who will follow Tim Cook at Apple. Say that all of this, the market is really looking for something to talk about. You can see in here, there's none of this. This is all like clutching at straws. This is journalists. They call it 5 things to start your day, so they need to find those 5 things, right? And there's really not much in here at all. Coming up, again, look, not much in here. Focus on the Bank of England. We've already spoken about that. They've already done that. We're already past that. And then some Warner Brothers out today, but nothing really significant coming through on the wires. So those stocks you see in here on the headlines in here, nothing really huge. Stock traders, bond slip, as traders seek fresh impetus. So in here, there's the headline, there's stock bond slips. So stock slightly lower, bond slightly lower. We've been rallying. We've been going up and up. The market stayed relatively, when I say the market, the equity indices have stayed strong on this rebound that we've had from late April through into early May. As we said, the Dow 6 straight up days into yesterday. And I keep saying this week, my view has been grinding higher. We're not looking for big impulsive moves. The moves higher have been very small, like around 0.5%. But what we do see in here is potential. I think still, my underlying view for the week has been slow bullish grind, and that's exactly what we've had. But I do think you have to just be careful. We could easily see a significant dip back lower, a correction back lower, and today could be the day for that. But I think what we need to do is really look for the treasuries. And so Treasury is a dip lower yesterday, extending that dip lower into today, and we'll take a look at that. And that could be a little bit of a catalyst for stocks to do a little bit of a correction. But if we look into Europe, pound drops after Bank of England signals closer to rate cuts, so pound down, and then the FTSE. So gilt yields have gone lower. Gilts are UK bonds, okay, UK government bonds. So gilt yields are lower. That's up in price, and the FTSE is up as well. The UK's FTSE 100, and it covered in there. UK FTSE 100 outperforms in Europe as Bank of England fuels rate cut bets. So that all coming through. And then also in here again from Reuters, sterling falls after BOE, FTSE jumps to record. So the FTSE is back up at its record level. But in the US, futures are dipping slightly as yields, so yields go slightly higher, bond yields going higher. Jobless claims data, yes we do, but I mean it's weekly data, it rarely moves markets. Let's take a quick look at the overnights in here. I say there's been a real big disconnect in here between Asian and US and European markets. So the Nikkei's down about 0.3 in here this morning, Hang Seng up about a percentage, but I say that real disconnect. But you do see in here stock indices, the FTSE's up 0.5% in here at the moment, was up a bit more than that previously, up to a record level. DAX, the German DAX, up about the same, about 0.4, and the CAC, the French CAC, a little change in here this morning. And going in here to the US, we had a slight dip in the Nasdaq yesterday. As we said, Dow did make it higher. S&P was relatively unchanged. And if we go and look on the futures in here this morning, with those bond yields slightly higher, we are seeing a dip in here, but it's not a lot, between 2 and 0.3 lower on the major US stock indices. What else do I have for you in here? CME, I'm not going to go through this. This is hardly moving in here at the moment. So it's the CME Fed Watch tool, not really important right here, right now. So here's that little move higher. So we had a slight move higher. It was already moving this way yesterday, but you can see another little push higher in here this morning. So yields in here having, yields in here having moved significantly lower yields. We were flagging all these levels in here, particularly around the 450, 448 level, and 10-year bond yields. Oh, sorry, it's really jumping around. 10-year bond yields spiked below that at the end of last week, and then further below that going into the first part of this week. But then you can see in here we've retraced back higher. Gosh, what's going on here? Retraced back higher in the last 24 to 36 hours. And that's not a big concern for markets, but higher yields are obviously slightly negative for stocks. And if we go and look on our outlook in here, yes, we've had a dip lower. Our bullish bias still remains intact. But if we do get a further dip lower in the US Treasury markets, we could see a little bit of a correction. In fact, on the stock indices, I've still got this underlying bullish tone. Markets kind of marked time yesterday. We've been talking about this all week. But if we go and take a look, this is my little bit of a concern. This move lower in bond prices. We moved lower and we moved lower again in here this morning. We could see bonds in here. This is a 10-year note, by the way. You could see 10-year note, you just dip a little bit low. It doesn't have to dip a lot. And then that could just then be a little bit of a catalyst for a little bit of a correction, in here. We spoke about it yesterday. The market really didn't do anything yesterday. This is the S&P, it dipped slightly lower and then was slightly lower. But we said this was probably going to happen. It's going to be a quiet week. We had no real catalyst. We've got the big piece of data next week. Remember, Wednesday, the CPI data. So we dipped yesterday. We had a slight rebound and then dipped again on the ES. And if we look at the Nasdaq in here, similar story, slightly dipped back lower, then rebounded. Very narrow ranges, and narrow range in here so far tonight. And again, we look at the Nasdaq. Unless we undercut yesterday's low, probably looking for sideways in here, but but the real trigger could be below yesterday's low, and particularly if we get those yields, I would keep your eye on those bond charts. Okay, the bond, the 10-year, 30-year, 2-year, 5-year, whatever. Checking out the levels in here that we've got on the US Treasury report that goes out. It's below where you are right now. If you go right to the end, you've got these levels in here. If we start taking out the first level of supports in here on any of these bond markets, okay, support in price means we're going higher in yield, and that could be a little bit of a catalyst for a slight move lower. But I'm not looking for a big sell-off in stocks, in here. But I think, I've got an underlying bullish tone as well, carrying, and you've got, with the markets as they are at the moment, this is still bullish. This is just high level flag consolidation. So it could easily just pop back up to the highs. That's on the Nasdaq and the same on the S&P in here. But I think you just have to be a little bit wary. My concern about the bullish view is just keeping an eye on those bond markets. Okay, so just keep an eye on those. Not much else in here to say. Reminder again, no webinar on Friday the 10th of May. I'll be returning with you guys on Monday the 13th, I think. 13th, 10, 11, 12, 13th, Monday the 13th. Until then, I'm going to wish you all a great trading day. Have a great weekend too. Have a great day tomorrow, and I'll be back with you on Monday. Bye.